Good morning and welcome back to AusBiz as we open this brand new trading week. Let's first get across what we have seen on global markets, where we finished on Friday. I'm Andrew Gagan. Good to have you with us here. Let's get to that then. Risk on Friday as those markets reverse recent losses. Bitcoin bouncing back from its sharp sell-off and precious metal prices also recovering. Now on Wall Street, the Dow eclipsed 50,000 points for the first time, while the S&P 500 and Nasdaq also surged. For the week, the Dow added 2.5%. The S&P 500 was mostly flat, and the Nasdaq closed down 2%, dragged lower by a sell-off in those tech stocks, with investors concerned that AI could create more competition for software companies and hurt their margins. Now, Amazon ended Friday's session down more than 5% after revealing that it planned to more than double its capital expenditure this year. Chip stocks rallied on expectations they would benefit from increased spending on AI data centers by Alphabet and Amazon, with Nvidia shares surging along with advanced market devices and Broadcom. CrowdStrike and Palantir both rose, with the S&P 500 Software and Services Index adding around 2.5%, ending 7 straight sessions of losses there, and Caterpillar giving the Dow its biggest boost. Molina Healthcare shares plummeted after health insurer forecast 2026 profit at less than half of Wall Street expectations. Roblox rallied after the video game platform projected fiscal bookings above estimates, and Reddit fell even after the social media platform forecast first quarter revenue above analyst forecasts. And Cboe Global Markets beat Wall Street estimates for fourth quarter profit as elevated market volatility boosted options trading volumes at the exchange operator. Well, the coalition led by Japanese Prime Minister Sanae Takaichi has recorded a landslide win in national elections, with her Liberal Democratic Party projected to win as many as 328 of the 465 seats in Japan's lower house. The win paving the way for promised tax cuts that have boosted likely to boost military spending, which that's unnerved financial markets. In the US, consumer sentiment has improved, with future expectations steady, while inflation expectations for 5 to 10 years ahead rising to 3.4% from 3.3%. Interest rate sensitive shorter dated US Treasury yields rebounded from more than 3-month lows ahead of January's highly anticipated jobs report that will offer the next clues on the strength of the labour market. The US 2-year Treasury yield rising to 3.5%, the 10-year at 4.21%. And the US dollar index was down slightly on the day on Friday. The yen lifting ahead of the election result, and the Aussie is trading at 70.2 US cents. Well, oil prices rose on Friday, reversing earlier losses as traders worried that talks between the US and Iran had failed to reduce the risk of a military conflict between the two countries. Brent crude futures up almost 1% at $68 a barrel. The gold price rebounded, helped by bargain hunting, a slightly weaker dollar, and lingering concerns over those US-Iran talks. Spot gold up 4%, trading at around $4,960 an ounce. And silver surging almost 10% to be around $78 an ounce. While that risk-on sentiment has seen Bitcoin climb back above $70,000, having put on more than 11% over the weekend. Well, let's get across global markets then, those movements that we have seen, that volatility continue, and the focus on the Kiwi market. Joining us, Greg Smith from Generate KiwiSaver in Auckland. Greg, welcome back to get this week underway. How have you started there?
Yeah, it's been a choppy old time of it in the rest of the sessions, hasn't it? But in terms of the NZ market, we are down 0.4%, of a mixed bag actually. We've got Fish and Paykel, which is our main, or our biggest company, should I say, is down around 2%. It's been a bit quiet. We're actually returning from a long weekend, but it is about to get busy here. We've got a bit of data out this week in manufacturing PMI, our IBNZ survey of expectations, migration, and the big one for us is the earnings season, which gets underway here, and we've got around 34 companies out of the NZ 50 reporting between now, or Thursday should I say, and the end of the month.
What are the general expectations there, Greg? I mean, obviously, likewise, this side of the ditch, we're also getting going with many of the larger companies reporting this week.
Yeah, Yeah, I was just going to say, Andrew, your economy is in a bit of a better state than ours is, which we've talked about before, and obviously, the RBA put up rates last week, but we're a little bit off that. We've got RBNZ actually meeting in February 18th, but no move is expected there. But yeah, we've had pretty tough economy for some time, but we've talked about in recent times on this program that there are some green shoots coming through. But yeah, there's a really low bar of expectations for our own earnings season. Lots of different industries reporting, so it's going to be a good temperature check, if you like, on the health of corporate New Zealand. I suppose what we'll be looking for is confirmation that the economic green shoots that we're seeing are starting to be felt by corporate New Zealand. So I think in terms of backward-looking earnings, that's probably not going to be anything stratospheric or not going to be certainly fireworks there, but it's all going to be about the outlook, and I think that's what markets will be focused on. Expectations are that we're going to see around about 20% earnings growth over the next year, so which would be very good, but obviously from a very low base. So we'll be looking for some confirmation there, and if we do get that, I think that could really help our market over the next little period. Obviously, we have lagged a lot of the major markets over the last 12 months or so.
Greg, let's turn to Wall Street. Some sizable gains we saw certainly on Friday. Mind you, that's come off the back of some considerable losses, particularly led by tech stocks. Now, we are seeing that rotation out of tech stocks, and it looks as though perhaps the Dow has benefited as a result.
Yeah, it sure has. So, yeah, if you look at the tech side, obviously parts of the technology sector have been under severe pressure. If you're looking at software services, it's down 18% this year. There's a real focus on whether the AI spend is going to be worth it. Obviously, we don't know that at all, but obviously you saw results from Google and Amazon, which you referenced. Really pretty good results, but the focus is on the AI spend. I think Amazon 200 billion this year. I think that's almost that's probably equivalent to most of New Zealand's GDP. So that's a big number. But yeah, there has been that rotation taking place. As you say, the Dow's gone through 50,000, and you referenced names like Caterpillar had a really good session. I think that's really reflective of the fact that the US economy is in still quite a resilient place, growing at over 4%, potentially towards 5%. The PMI last week was very encouraging. The services sector print was very encouraging. Confidence, it's probably a little bit flat overall, still down 20% on a year ago if you look at the University of Michigan study. But for the most part, the economy is landing well. That sort of recessionary scenario is probably sort of going out the window. So, yeah, interesting journey for the Dow, isn't it? So, just looking at a bit of history there, 1896, it took till 1972 to get to 1,000, got to 30,000 in 2020, it was 40,000 last May, so up 20% just 8 months later. That's pretty good. But I think this transition that we're seeing could have further to run, particularly given the valuations in some parts of the tech sector. So it's going to be fascinating to see the latter part of the earnings season in the US.
Yeah, it's interesting, isn't it? The Dow, we often dismiss it as perhaps largely irrelevant now, but it's certainly making a case that there's a good reason to be focused on it, given we are seeing that rotation. Greg, I mean, where do you think you want to be right now if you are invested on Wall Street?
I think you've got to be, for we start with technology, which has led the last sort of 12 to 18 months or so. I think there is a growing, we're getting this already in recent weeks, that there's going to be a divergence between the winners and losers in the AI race. And I think you've got to be very selective and very careful there. If you were holding Meta, that's a stock that seems to be doing quite well, a good reflection of the economy as well. But some of those other, certainly pockets of excess strengths or so. So I think you've got to be pretty careful about being too over-owned in the tech sector. And I think it speaks to having a more perhaps diverse portfolio as we go to this next sort of stanza, if you like, of the market rally. More economic facing stocks, I suppose, is where we're heading. There's been quite a few laggards there, but you're starting to see some momentum pick up in areas. And I think you're seeing a lot of value if you go outside of the super cap tech stocks. So we're looking at the health sector, we're looking at consumer goods sectors as well. So I think it's really, the tech sector's had a great run, but I think it's probably a bit wise now to be looking at being a little bit more diverse, and also not getting too owned in other parts of the market. I mean, obviously, you referenced gold and precious metals. Obviously, that had a huge run, and we had a lot of clients increasingly coming to us going, should I be more invested in gold? And we saw what happened there a week or so ago. So I think, big tick in the box for diversity. It's going to be a really interesting period in the coming months. I've got quite a bit of data coming out this week in terms of the CPI, in terms of the non-farm payrolls. It's going to be relevant to a data-dependent Fed, and obviously a few more earnings to come.
Yeah, interesting. Gold, I mean, it's proving to be anything but a safe haven at the moment, isn't it, given that volatility we're seeing there. Just before you go, Greg, obviously also eyes on Japan in the wake of a thumping electoral victory by Sanae Takaichi, the first female prime minister. What are the implications there? I guess we have seen the yen, of course, under pressure.
Yeah, that's for sure. So, which benefits the exporters. So that's a tick in the box there. Yeah, Japan is one area which you have been increasing exposure to in recent times, including likes of ASICS, which is listed there. So exporters, I think, can continue to do well. Obviously, you see certainly a landslide win, and given a very, very super strong mandate. So I think that should actually be received positively.
Greg, enjoy your week. Thanks for joining us and Generate KiwiSaver.
Thanks, Andrew. Bye for now.
All right, let's take a look at the local market then. We are expecting a very positive start, reflecting on what we saw on global markets on Friday. So S&P ASICS 200 up 1.2%. Bear in mind, of course, if you've got a short memory, on Friday, the market falling 2%. It's the largest fall since Liberation Day back in April last year. So let's see how that plays out for the day ahead. We'll get right across that in just a couple of minutes.